Well, it seems fears of a protracted trade war between the US and China are receding, and there are reports that talks are underway behind the scenes to avert a damaging showdown. So are we out of the trade war woods? And where next for markets? Well, with me now is Anne Berry, Managing Director at Cornell Capital, having spent 10 years at Goldman Sachs in New York. Anne, good to see you. Did the markets overreact last week? I mean, $1.4 trillion was wiped from the value of the S&P 500, all over $15 billion worth of tariffs on US goods.
I think the implications, though, for that one particular policy sweep that was coming out are enormous. If you think about the interconnectivity of global trade, this wasn't just about the implications for either the US or China, but also much more broadly both across Asia and across other parts of the North American Trade Association.
But yet some would say, well, hang on, if America and China stop buying as much from each other, they'll simply have to substitute that with goods from other people. And whilst it may cost them a bit more, overall trade globally isn't that much affected.
I think it's just given that connectivity, it's more complicated. So, for example, if we look at the last bout of trade announcement that came out, which was the tariffs on steel and aluminium that were announced, you can see today Canada's come out and announced anti-dumping trading rules in Canada. So it isn't just the US in isolation that's causing changes in other countries' trade policies, but you can see the repercussions are much broader.
So how much substance, how much credence are you giving to these reports that there's a lot of talk going on behind the scenes now between the US and China?
Well, it's definitely a big announcement to have made if that wasn't the case. I think that certainly if you look at both the US and China's national self-interest, it makes a lot of sense for them to try to come to an agreement. For example, when the US came out and announced potential tariffs, but with very little detail, on up to $50 billion worth of product, China came out with a very targeted response, which included going after, for example, some farm products from the US. Now, that would come out at a time when US farming comes at the lowest they've been in a decade. So the incentive really is there to come to an agreement.
And all places that voted for Donald Trump, of course, these big farming communities.
Yep, absolutely in the heartland.
Interestingly, though, Trump's popularity rating has gone up 7% during the last month. It suggests that the ordinary American voters actually quite like what he's done here.
Well, Trump was very clear during the election campaign that he was very much running on an America First platform, and he's also been clear in his speeches since then that one of the pillars of national security will be trade, quote unquote, on a reciprocal and fair basis. So from that perspective, he can be seen to be delivering on that heartland promise, but the jury's out on the details still. Right.
I mean, do you think the tariffs that he's introduced, that Trump's introduced, is that more about gaining leverage in trade talks rather than being a straightforward, blunt protectionist measure, as some have suggested?
Well, again, if you look back at what's happened on the steel and aluminium tariffs, you've seen caveats to these bold statements coming pretty quickly. So Canada and Mexico were very quickly given carve-outs and exemptions. I think the expectation here is you might see something of the same.
And the EU as well.
And the EU as well. And I mean, particularly, again, as Trump has tied tariffs to national security and thinking about the interplay with allies from a military perspective, the EU is a big friend to the United States. You'd imagine some incentive there for collaboration.
And what about the markets in general then, Anne? I mean, obviously we had this amazing bounce back overnight on Wall Street, borne out by, is it justified?
Well, the dip that it's coming off the back of was enormous. So yesterday was the biggest one-day move upwards since the financial crisis, but off the back of the biggest two-week dip that you've seen in the last 2 years. So the volatility that I think we're seeing is probably likely to continue while this unfolds. It's
worth pointing out, we also, I mean, we're at the end of the month, we're at the end of the quarter, you'll often see a bit of books going. I mentioned it just now with the FX markets. You see that especially with equities, don't you?
You do, and I think also there's a lot of domestic policy that's coming out affecting the US equity market too. We saw the interest rate edict come out. Folks have still very much got their eyes on inflation. So trade alone is not the only thing that the market's watching right now.
All right, Anne Berry from Cornell Capital, great to see you. Thanks for joining me.